All right, welcome back. We're going to continue our Exited series where we're talking to exited founders. And today we're talking to Mike Nelson. Welcome to the pod, Bootstrapping to Billions. All right. So, Mike, I appreciate you doing this today. This is part of our limited series. I want to get the audience read and fast so that we can really invest the time into the conversation, the story, the journey, the lived, learned lessons. So the deal, the business is really good emails. And you started it in 2014 and you exited in 2024.
Yeah.
So a 10-year build cycle to the point of an exit, bootstrapped, which is amazing, especially for our audience listening. So we respect the heck out of it on a lot of different levels. Definitely want to elevate and celebrate this one. And in terms of exit value, 6 to 7 million range.
Yeah. Mm-hmm.
And you exited to a publicly traded company based out of Italy, Groen's. And you are there still today for continuity.
Still here. Yeah.
And that's where we start. So everything starts somewhere. We'll get it all the way to the point of exit and where you are today. But getting back into that moment of time, right? Everything starts, it's 2014, over a decade ago, which is crazy. So we're going to do a flashback scene, moment in time. You started this concept. Why? Like, how did you first even stumble into this idea of really good emails?
Yeah. So my first career was in SEO and PPC. And so if any of your audience lives in that world, trying to game the systems and be in front of people online when they're searching for it, digital marketing was my major. And I kind of found a friend who was starting a business. It was called skincarerx.com, and joined him and off the races. Like everything I learned was because of my friend there. And Chris was awesome. He was a great entrepreneur. He ended up buying other businesses and investing in like this auto company. Like there's all sorts of stuff that I like as a college student was like just gaining from there. But one of the things I learned, because you get really analytical with like PPC and SEO, you're always testing, right? Was that our email program, which was pretty large at the time, 2009, 2010, we had close to like 500,000 subscribers at the time.
Wow.
And had bootstrapped this thing also, and was just off the races with SEO and acquisition. Is an SEO powerhouse. Actually started as like an SEO kind of company and then turned into a retailer. But with that, like nobody's watching email. And so I got in there and started tweaking, text and CTAs and offers, and became really good at understanding and forecasting. Hey, in this quarter, these are the sales we're going to do. This is how much we can expect. This is what our open rate has been. And it was like super easy for our CFO to understand this channel is going to make this much money versus like PPC would kind of go up and down. SEO is like at the mercy of Google, right? The Panda updates, all this stuff that was happening. And so I went on tour and started speaking about email at all these conferences. And that's when kind of this idea was, hey, all these people would ask me, hey, do you have like, can you forward me this email that's up on stage? And I would be like, yeah. But then I'd get all these weird requests and I don't remember which one that they're talking about. And so the idea was to put something online and just have my whole catalog of what I've been doing, plus all the things I'd saved from other people. And so that's where this idea came from, is just like, let's just create a blog. And literally it was on Blogger. And then we switched to like WordPress when I joined my co-founder, who had the exact same idea, almost the exact same moment. He was working for an agency and doing a lot of the same stuff about proving the ROI of email and all the design elements that go into it. And so he actually built reallygoodemails.com. I had a much crappier domain. And
What was it?
I think it was just like, it was also like super simple. It was like email marketing something.com. Actually, I only worked on it for like 4 months until somebody told me about Matthew. And I reached out, I was like, hey, we shouldn't do this thing. We shouldn't be competing as combined forces. So I joined on with him and we just kind of treated it as a blog from then. And we had our full-time jobs. He was at an agency. I was working in skincare, and then went to a travel company called Lonely Planet, led marketing for Lonely Planet for a while. And
Take it.
our business were going and growing. And we couldn't take take it on. So we brought in some other partners to help us as the side business of Really Good Emails just blew up. Like it grew really, really fast. And we
So
continued.
many things that we could jump into right now because you just dropped a ton of the story on us, and I feel like it's a good moment in time for me to just pinpoint that exact presence where we validated that this is a concept to do and where it incepted from, where it came from. A lot of folks listening on the audience are maybe some folks are trying to identify, well, what is a good idea? Some folks have a good idea that they're working on and they need to validate, right? So I said those stats earlier. 50% fail in the first 5, only 1/3 make it. Well, of the reasons why folks fail from the SBA, there's 5 top ones. Number one's cash flow. Number two is feeling of not having product market fit.
Yeah.
And we feel like in these episodes, we can help potentially alleviate some of those failure risks by paying attention to folks like you who have exited and actually navigated that stage, that early stage successfully, which is finding that product market fit, right? So you did it for yourself. You were in a business. It was a very healthy business because 500,000 is, I think, what I heard of subscribers in 2009 is like a tremendous list. Cause I'm just thinking, flashback to Nam to a certain extent. Like when I was bootstrapping and building, on my own then in that same era, that's you just the infrastructure to be able to do that is a huge lift, let alone actually being able to acquire those
Yeah.
subscribers in the
You would
first
spend
part,
us a whole day to send
right?
that email.
Huge, crazy. So, but you had such a large sample size to be able to pay attention to the nuances of data. So you're able to actually run and then pay attention to the analytical outputs of the inputs of the emails in which you're sending,
Yeah.
which then you had the insight internally be like, hey, we have like multiple channels that we're working. Let me actually focus on this one and provide some really good predictive reports to our CFO so that they can make good, timely decisions in the business and actually hopefully make better decisions in the channel which I own. So acting with ownership, which is amazing internally. I'm curious there. I definitely want to stop and pause in a second, like how you actually did that. But before we do, you then were able to go on on the road, and I was curious if the events you were attending and when you were speaking and you had the slides, if that was with the RX company or is that was with something separate that you were doing individually. Like, how did you find yourself speaking to an audience? And then in speaking to the audience is ultimately how you found people were interested and they were asking you for this. And your simple solution of let me deliver this to folks was let me launch the blog. So that was the inception story. Like you literally did it for yourselves in a large business. You then went to the show, you validated interest from an audience on stage, which is amazing. I'm curious how you got there. And then you solved let's satisfy this demand by putting up a blog, which was the inception of the idea, and you ultimately found your partner who was doing the same thing, and you collaborated. Competition versus collaboration, you decided to collaborate and it clearly worked out.
Yeah.
So let's
So
let's reflect back. First
woo,
question would be, what did you do that actually put together a report that your CFO was able to use? Like what data was valuable?
I mean, so every day we looked at our rankings, how much we're spending on Google ads, and then what we're doing in other channels. So this is also right when YouTube was acquired by Google. And so I was also in charge of that program of sponsoring beauty gurus, and seeing how much money was coming in from the sponsorship. So it's all very much ROI focused on each channel. And so when I go in to the CFO or the CEO, I would say, hey, here's how much we're making from all of our organic SEO work. Here's how much we're making from the PPC. Here's how much we're making from email, how much we're making from social. Um,
So it was
and
a benchmark report based on channel and then value.
yeah, and essentially it was me. I was the only cost for email.
Mm-hmm.
And then we had a little bit of a calculation because you said, well, the acquisition of a subscriber is actually not zero because we're doing PPC, we're doing organic, we're doing social, so all these things coming in. So we had a kind of a small number that were attributed to acquisition cost on that front, and then my salary, and that was it. And then as we got bigger, we had like our own servers, but then we switched over to like an actual ESP, and so that took in consideration how much we were spending on sending through like a good platform, email platform.
Email service
But then
provider. Yep. All right, we're going to take a quick break from today's episode for a shout out of our sponsor, Gelt. we've been working with sponsors that we know, we like, and we trust, and Gelt is one of them. We've had Tal on the podcast in the past, and the Gelt teams joined us for a world-class boot camp webinar on year-end tax end savings, where we learned that a lot of founders think taxes are just the cost of growing business, but if they're done right, they can actually drive growth. And that's exactly why I like Gelt. They're expert CPAs, supported by in-house AI tools, keep everything accurate, organized, and tax efficient so that every dollar you earn works even harder for you. I know that there's a handful of case studies on their site. You should check them out. One of them highlights a tech executive who was maxing everything out. She thought she was doing everything right. Her name was Laura. But once she got connected with the Gelt team, they helped her go even further and optimized her stock portfolio, mortgage deductions, real estate tax planning, and charitable strategy. In the end, she ended up saving well over $30,000 in annual taxes. Gelt is offering our community 10% off your first year. Just mention Bootstrapper on your complimentary free one-on-one session with one of their CPAs, and you'll get that 10%. In order to do so, head over to joingelt.com. Again, that's joingelt.com. Mention Bootstrapper, get 10% off. Now back to today's episode.
Yeah, it was with a company called Responses at the time, and so we had all of our channels, and of those channels, we had organic SEO, email, social, and we were essentially saying how much we're spending on PPC, how much we're spending on email. We had our own infrastructure of our own servers. Then we moved to an ESP, an email service provider. We were paying all these influencer, YouTube, beauty gurus out monthly and seeing how much was coming in. So essentially, when I was going to the CFO, I was saying, this is what we're spending. This is like our SEO, pretty much free. It's just where we're just tailoring how we're rejigging the site. And then email is pretty easy to be like, I'm the only salary plus the infrastructure.
Mm-hmm.
And then what it was easier is that SEO world is like, well, if we do something today, maybe in 3 months or 4 months, my rankings may increase, right? And with like so an influencer, it's kind of like a crapshoot. You know, if you pay enough people, you'll have enough, spread, and you'll make enough money. We don't know if that video is going to flop. PPC is pretty predictable, but it also is based off of cyclical. But then email, I could be like, hey, on Thursday, we have 500,000 people. It's going to open. We know our open rate. We know our click-through rate. We pretty much know our conversion rate because it's the same every single day. And so that report was like a weekly report of here's things going on right now. Here's what we have planned in the next 3 weeks to 4 weeks. So we do like our forecasting budgeting process, and email was literally within like $10,000 range
of accuracy. So quite literally, you're able to take the breakdown of an ROI, and then you're breaking that down in terms of the source, which realistically was email, which was you in terms of ownership. And you're creating this business case internally for the CFO of like, this is a great place for us to focus. This is a great place for us to invest. Here's the reasons why. And then the company made that investment, but I'm curious, like, how did you get to stage? So you said that you went from doing it internally to then speaking on stage and getting an audience of folks to give you feedback.
When I joined the company, we were doing a little under $10 million online. Again, this is still a lot for 2009.
Yeah,
and we were I would call us a smaller company. We were based in Utah at the time. There was us, Overstock.com, and maybe 2 other companies out of like the Salt Lake Valley. And so we registered on the Inc. 500 to see if we could grow. Again, my co-founder, or not my co-founder, my founder, Chris, was very much into, hey, we can probably get more investment, we can probably grow if people see eyes on us. So we went from being listed in the late Inc. 500, and then there's an organization called the Internet Retailer 500, and we were ranked pretty highly. And then as we grew, we were open about how much money we were making. And with email, we were making a lot of our money. So the more we pumped into email and acquisition, the more we made out. And so, within a couple of years, we were already doing $20 million in revenue. A majority of that was coming from email. And so that's what got me on stage, is to go talk to all these other retailers that were kind of growing this time and talk about like, how we were making money from that channel.
Yeah, so it was essentially highlighting that story of success, which elevated the business overall. And email was such a big, important revenue driver towards that story of success, which sentiment and market matters, especially as you're growing and scaling the organization. So getting you on stage was relevant and important.
Oh,
And
for
then you're
sure.
speaking literally on stage to an audience of folks, and the audience is coming back to you and saying, yeah, I'm interested in this. Show me more. And you're like, let me actually put together a site as the simplest possible way to get folks the value that they're asking for.
Hmm.
And that was the inception of really good emails. But it wasn't really good emails at that time. It became that through the partnership with
Yeah.
your co-founder.
Yeah. With Matthew. Uh-huh.
So
Yeah.
quite literally, that is the story. It's you solved your own problem in a very big way. So you were fortunate enough to be in a situation where you had a job. Sometimes you go get a job, get somebody to pay you, get experience, take all that experience, some of that pay, go build something on the side. You quite literally did that. You lived that life. You validated it. You found an audience, right? Then you found it on the side in terms of delivery of value. And then how did you start to build a model behind the business? Like, how did the business itself build from inception?
So actually this is just cold emailing. So we just cold emailed some people at MailChimp and said, hey, we're gonna start this thing. The
Great
response,
bootstrap business as well.
yeah, I know, like an amazing bootstrap business, best ever in all of history. The CMO responded with a GIF from a movie, and it was just like, "Tell me more." It was amazing. And then from there on, we had covered the server costs and a few other things we were doing, but essentially it was like a couple $1,000s a month. But it was enough for us to be like, "Hey, this is enough to spend time on it," right? And
Mhm.
then we launched on producthunt.com, which was really big at the time to find what other like entrepreneurs and bootstrappers
Ryan, yeah.
trying to launch. And within like that day, we were hunt of the day, and so we were getting tons of traffic, and that traffic just stayed. It like never fell. So as we had more traffic, we were able to go cold email to other advertisers and get them to essentially give us more money for placement on the site. And then that advertising arm became 1/3 of the business as we kind of grew other parts of the business through a SaaS part of the business and then an events part of the business.
Let's break down that. So folks listening, they're in that journey right now. They've already identified the fact that there's a problem to solve. They've validated some initial demand. It's like sell it, make it, exit it to a certain extent. You've already sold it, you validated it, now we're making it. For you, making it was delivery of content and getting traffic. That was kind of like the validation that there's an audience there. Partnership with MailChimp helped in terms of giving an infrastructure to be able to build with. And then we have this additional, so that became a third of the revenue through sponsorships, through traffic, right? So essentially ads, monetization of ads through traffic. Then you had two other streams of revenue. What were the other streams of revenue? How did you find them? And how did you validate them? And then how did you build them out?
Yeah, I mean, those other streams of revenue wouldn't have happened if um, we didn't reinvest the advertising money, right? So some other bootstrappers are going to think, cool, I'm making this money. I'm going to go pay off my mortgage. I'm going to buy a new car, all that kind of stuff. So all the money that we made actually went back into making the website better. So we hired some full-time developers. We didn't pay ourselves anything. And
And you
we thought,
bootstrapped this while still in a day job.
oh yeah, 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 yeah.
So
Yeah.
you're still in a day job doing this. And this business is quite literally building and growing on the side. You figured out the capacity to be able to do that and make that work, right? For
Yeah.
audience listening, because some folks feel like maybe I can't have a business and then also be in a job, but it is a risk mitigation technique and strategy, especially
And
bootstrapping.
at first, the job actually helped because as we were growing and our subscriber list was growing, you can kind of tell where people are subscribing from, right? So what city they're in, um, and so we could segment our users by city. And I traveled a lot for
Mhm.
that full time job, right? So I'd go to London, I'd go to Amsterdam, I'd go to Australia, and every place I'd go, I would say, hey, let's do a little meetup, even if it's only 5, 10 people.
Mm.
And so as I was traveling, I was creating a little bit of these communities to meet with, and then we were discussing the product and how their struggles and email, and that was just a very small part of my full time job at that point.
So you,
But
you quite literally were leveraging it. You created the opportunity, which is action. So you had to identify the fact that, hey, I could do this. create a meetup. You did, which is execution, which is amazing. Folks were joining. Now you're building a community.
Yeah.
Was one of the other third? So was the second the second of the three events? Was like the
Yeah.
concept of meetups, then did that convert into events? Like people are showing up, so maybe we start to monetize this?
Yeah, exactly. So at that point, I'd already done a lot of the speaking, um, and I'd been on like a circuit. Like I'd gone and done multiple shows for the same company in different cities. I'd spoken all over the world about email, and I really hated the experience. To tell you the truth, I was like,
Why?
because I don't know, in the marketing world, if you're as a speaker, you don't get a lot of people. I'm sorry, a lot of organizations don't pay the speaker. They say like, this is free marketing for you. You get on stage, the audience is captivated, they buy from you, right? And it's kind of same thing when you're doing other things. But for me, I was like, as a speaker, I'd rather get paid. I don't like that there's a group of people here that jump off to another stage. We don't have like a consolidated or universal experience. The food sucks. The hotel's garbage. Like, yeah, all
The
this kind of thing.
experience tied to
Yeah.
it. Yeah,
So
you're
for
looking at it as a product. Yeah.
yeah, so we were like, how do we change this for our own community? How do we own this environment and the experience for ourselves? So we started a conference called Unspam, and so Unspam was essentially born out of these
Yeah.
little teeny events, plus me having frustration with all the other bigger things. Like I was on stage, in front of 2,000-3,000 people sometimes, and you got on, and you got off the stage, maybe 30 people talk to you afterwards, and then you just separate. You never see these people again. And that was like the idea of how to keep these people together, learning the exact same thing all day long, very niche down. How do we keep it intimate so it feels like a community, feels like a network? These are people that you want to talk to. And so we capped attendance at 250 people. We
Mhm.
did multiple cities. And so that became a good part of the revenue for us because, you get large sponsors who pay anywhere between $15,000 and $35,000-$40,000 a piece, and then plus you have ticket sales, and so as a revenue side that grows pretty quickly.
Was that was that sponsorship revenue captured as like an extension of what you're already doing on the media? So was it
Yeah,
like
we
essentially more inventory for the
we
sponsors
had
you
it.
already
Yeah,
had?
we had relationships with the advertisers already, right? So you'd say, "Hey, Mailchimp, do you also want to sponsor this event we're doing?" And they're like, "Oh yeah, of course." So we already know the ICP is there. You're already driving traffic through that. We know that we'll probably have the right kind of people at the attendance, and we can be there in person talking to these individuals as well. And so, yeah, that
So
was
it's
easy.
seeded in. So you were literally taking the action of the meetups, which validated market interest, and then you already had the model that was working in terms of monetization. So you
Yep.
had market and monetization and it just fit. And then that became a second pillar. And then the third pillar earlier you said was SaaS. But when you're saying
Mhm.
SaaS, is it like almost like a community wrap SaaS? Because I'm almost feeling a community being built through this model, literally each step at a time. Tell me about the SaaS side.
So if you think about the website itself, is the easiest to explain is like a Pinterest for email marketers. So you like a campaign that Nike sent, you save it to your profile. You can look at the code, which you can't look at code inside your inbox. Um, you can decipher what they're doing. You can look at the divs, pull out the things like the CTA. You can look at the copy, and then you can save a collection, right? And so our SaaS product was essentially giving you tools to rip things from your inbox easier so that you can share it with your team, and then your team could collaborate on that idea. So you'd have additional collections and more ways to collaborate. And
Which
so
is
with
that what you were doing in the day job, or was that what was being asked by the members of the community? Like,
that,
were the users requesting the functionality, or was that like I'm building this for myself?
both, I mean, like as somebody who led the email team at my full-time job, I'd constantly be sending them, ideas from either the site that we were building or my own inbox. And at that point, I was like, it'd be nice if people from my team could also contribute to this. And you could contribute to the site in a way, but you couldn't really collaborate and you couldn't pull things from your inbox. You couldn't do some of these other things. And so we built that functionality as a need that I saw. And we got enough people to pay for it as well when we launched it. So again, is market fit within my own organization. And then Matthew, my co-founder, plus some other, our two other co-founders, which are also named Matthew. So it makes it super confusing. But yeah, we kind of just did this with our own teams and then found out, tweaked a little bit, and then launched.
Love it. And for folks listening in this journey right now, we're all at different stages, each of the 5 exits of ownership, right? It's like finding the problem for yourself, living it, and then solving it for the market, and then being able to build a viable business through it, monetizing it. At some point, as things are growing, you're getting to this moment in time where we're getting close to the exit. How did the exit come about? What was the inception of this concept? Was it like building a business to exit? Did you know that you were going to do it? Was it
No,
manufactured by you guys? How did it actually come about? What was the creation of the exit?
I mean it was really stressful having a successful side business, right? Like, and I feel bad like saying there's a stressful side gig because a lot of people do this full time and it's not successful. And so there's a lot of luck here. There's a lot of strategy. We had to be very intentional about our time again because all of us had full time jobs and we kept on getting promoted, and so it's harder for us every time we grew revenue for the side gig. Also,
Mhm.
our full time gigs would grow. And then we'd be like, well, I'm making more money full time. I'm not going to jump to the side gig. So it just became hairier and more complicated. And so in 2019, somebody came to us and said, hey, we like what you're doing. We want to acquire you. And so we thought, okay, let's kick the tires. Let's see what the offer looks like. We'll see how the setup is. It's a company that we knew. It's a company that was advertising with us. So we knew them pretty intimately. We knew that we could contribute some real value to them. And so we did. We went to due diligence, and at the end, the offer was way lower than what we had expected. But we had gone through the role of like hiring a lawyer, getting all of our data set up, figuring out what that would look like and what all that. And so internally, our minds were like, well, this is a possibility at some point if we
Mhm.
ever get an offer that's large enough that would make us happy. If not, we kind of have to figure out what we're going to do with our full time jobs because we can't continue to grow this. So it was like, do we go full time or do we keep it lifestyle? And so lifestyle is just like, keep the lights on and hire somebody to do partnerships and maybe a developer full time and just like keep the feature set as is. And we would just take a cut, which was, not that great, but it was still some
How
money.
much revenue were we doing? Like what are we talking just from a top line perspective at
So
this
in
stage of
In
2019?
2019, when this is like right after our first conference, we were probably doing around half a million, 400,000.
Yeah,
Uh,
healthy. Yeah.
and then, we walked away from the deal and then COVID hit and everybody was online and everyone was figuring out like, how do I do email? And
Mhm.
so this is when our site blew up. Like we had
Mm.
over 1 million visitors per month come to the site, all trying to figure out how to do this. This to me would have been the best time to sell, right? And this, I think, like if I can go hindsight and say when you never want to sell when you should sell, right? This is like we had multiple offers this time. We're like, hey, dude, look, this is not going to slow down. We're making a lot more now. Where our traffic's up, everyone knows who we are, um, and so we rode that coattails pretty long until all of us just got burned out. And it
Mhm.
was to the point where it was like, hey, we can't do this on the side and our full time jobs. At that point, Matthew, my co-founder, had started his own agency for Sean Parker, so Napster guy, and so he was like, all in on that. And the other co-founder was working with, Nike on a project, and the other one's working on some emails for big big auto brands. Anyways, so we were strapped. And so that was like, okay, let's go back to this idea of selling and see what we should do. And so we went to those advertisers, the ones that were interested in us in the first place back in 2019, said, hey, what if we did this? And actually, one of the guys that I was talking to was Massimo, from the company who acquired us. Uh, but to me, it was more like, do we make a good fit? It was actually wasn't even like, would you acquire us at the time? It was more of like, you guys should partner with us. You should sponsor more of our things. And then I said, but things might change because we're kind of going through this acquisition idea, and some other people are talking to us. And he's like, oh, let's actually have a
Why not
conversation.
us?
Yeah,
Yeah. So okay, so 2019, the deal comes to you.
yeah.
The
Deal
deal's
comes up.
coming to you from your existing base of customers, your sponsors,
Yeah,
which pattern recognition. We're having a lot of these exited in the series, the Exited podcast. I'm trying to identify from a inception of business through to exit and the pattern recognition, just like similar to how you're doing with the emails or did with the emails, the data, and hopefully data indicates good decision making, and good decisions get better results. So function of all this, one of the things in terms of pattern recognition, source a buyer. And I'm seeing a lot of sources of buyers of existing partners as well as existing customers. And that was 2019. 2019, that started, it jump started this concept in your brains, and you went through diligence. You actually invested in the process. And the byproduct of that investment became, this is a deal we can't do. And 2019, for many folks, especially with a third of revenue in events, was a very scary time going into 2020 with
Yeah.
COVID. But for your business, maybe events came down, but it was this opportunity of a new market jump of everyone else's events business are going down too. Email and digital is becoming a very big thing right now because it's the only way in which we can actually function and do commerce. So you rode that wave, you jumped into that wave, and it became an upstream event and opportunity for you. And
Yeah,
in
it was
that
easy for
situation, like, it was a boom, but you're still in the day job and all the partners are, and there's a lot of things going on because life is a real thing and things are growing, 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 growing. And it's like, oh, mate, we got to make a decision. Either we go in all the way or we get back into this concept of an exit. And through conversations with your existing customer base as well, again, second thing that worked, do it again, pattern recognition, it actually became that conversation incepted as the buyer.
Yeah. And during 2020, we actually had a few VC firms reach out. Instead of buying us, they wanted to throw investment into us,
Yeah,
right? And
ZERP
they
was a
wanted,
very real time for sure.
yeah. And through that process, we really were like, okay, they're like, all these people are like, hey, we want to give you $1 million to $2 million, but we'll take 60, 70% of the business.
Mhm.
Tell you the truth, like, we didn't need $1 million, $2 million. Like, that
Yeah,
was
you had a
all extra
healthy
money.
business.
Healthy. Yeah. So, for us, it was really easy to see that the VC route was not for us
It
because it
was
was just
really
going,
this decision matrix of full time versus, like, where are we going to be full time? Where's our attention and focus and capacity?
yeah.
Because life is a very real thing and we all have finite resources, whether it's capital, time, or energy or something else, right? And you had to make this capital allocator decision. You went through the process. Did you end up going through a full, like, did you bring in multiple buyers in the second time around? So, like, 2019, you only had one. Going into 2024, was it multiple buyers, and how did you approach it?
Yeah. We had, we were talking to people, and multiple people raised their hand that said they were interested. And
So you
so,
ran a full process.
informal process, but yeah, it's a process. Yeah. Until it got real with multiple players, then it became a formal thing. Where it's with deadlines and due dates, and like, you have to, we have to make a decision by this point. And that helped because we had one organization was looking at only part of the business. They really wanted our events business,
Mm.
but they were offering a good amount of money for our events business. But they didn't really care about the rest. And then we had another company who wanted all of it, which was a very well-known brand that they weren't public yet, but they were going to go public. So, and then we had Massimo come in near the end of, like, those two conversations had already been going on, and so Massimo came in and was like, "Hey, we'll throw our towel in the look for the towel
Yeah,
burn."
let's
That kind of
live in
good.
the heart of the moment. So if you can reflect back, it's been a little bit over a year now, so it's still relatively new, but you had this decision to make. So you had multiple buyers, you were running a process, you had to make a determination around who, and you have the concept of price, you have the concept of terms, you have the concept of fit and longevity
Yeah.
and future, and all of these things were coming in. And you also had this concept of deadlines and timelines, and we have to move this process forward. I want to start with the oh shit moments to a certain extent. Like, what in that moment of times were giving you, like, oh shit, like, all right, like, let's focus here, there's a problem here, there's a fire here, there's something that somebody listening right now that maybe is getting close to that stage could do proactively. What were those
Yeah.
moments?
I mean, there were a few during due diligence. One of them was, how real is this audience, right? So we had to go through, and we found that there was a good percentage. I mean, not a massive percentage, but there was a percentage of people that were just fake, like fake accounts, spam accounts, bots, that were signing up. that were creating accounts. We sold ourselves as this large community and active, and then we started ourselves. We were naive to this whole process, like thing. We're like, oh, look at this growth, and then we started looking into these accounts. And say, oh, actually, that's not a real person. It's like their email address is 779633 at qq.com or something, right? And so you're like, I don't know who this person is, and then you look at and so that was one of the big hurdles because then we had to convince
How big of
all the
a problem was that? What percentage?
it was to the point of, if I remember correctly, like 1 month, it was like a third of our traffic.
Oh, wow. Yeah.
But then it was like a fluke month, but it was the month we were doing due diligence with these companies, right? So that was what spiked how much of this traffic is actually real because we got bot attacked. So we had to spend a lot of money on security and hiring people to do this for us because we had no idea what to look for. So that cost a lot of money. The other thing
So
was,
that was a vulnerability in the business, but there
yeah,
is no causality to be proactive in removing that risk because in your insight and you guys as running the business, you're like, these are good leading indicators. Like these
of course,
numbers are good things. So there's no problem here because these are good things. They're on the uptrend. But realistically at that stage, it became a problem that could have been dealt with proactively. But there would have been no reason to even think about it.
right,
Valuable insights for folks listening. It's
yeah,
sometimes like
and
what's
then
diving deeper. Yeah.
the thought of taking someone else's work and publishing it on a website is can kind of be a gray area of trademark and copyright infringement, right? So we're taking these emails from Nike, very much like you would pin an image from a blog article to Pinterest, right? It's the same kind of mechanic, but you're using that asset for your own kind of gain in terms of what those end users are using it for, right? You're not going to use a picture of some kitchen to recreate a picture of a kitchen, right? So it's not like the photographer who took that picture of a kitchen is really considered mad that that picture made it to Pinterest. Whereas a Nike marketer who spent weeks developing the strategy and the design, the copy, and then we put it to our site, and then somebody takes that idea and is like, well, if I put my logo here and rewrite the copy, I can take a lot of the code myself and rewrite it. So we had to go through why we're still legally compliant, which was like we had gone through that process in 2019, but
Yeah, I would
because
think that that's something that you would have done in the
yeah,
past.
2019, but now it came up again for all three, and so we had to actually go and look at like cases that had been argued at the Supreme Court level to justify what we were doing, which took a lot of time and money, right? So if we could have gone into that conversation already kind of with that research, or that would have saved us a lot of time. That was weeks of conversations to prove that we were actually a legitimate business. Um, and then we had like the right DMCA clauses. So if somebody didn't like that we had on our site, we'd pull it down just like you would off of like a social media company.
Mhm.
Um, so we have all those processes. We had to build all those processes to make sure that everything was there. Uh, you know, when you sell business, there's lots of also ego, like who's gonna stay on with the company, who's gonna go. Is there enough for the cap table to make this worthwhile for all of us? And so that was, we had 4 founders at that point.
That's a lot.
Matthew
Yeah.
founders, and then we had 2 other guys that we brought on. And so it's like when we split this 4 ways, you know, is this enough for us to actually go do full time, or do we, that whole outcome? So there's a whole thing like going back to, if it was just Matthew and I, we probably could not have made it as successful as we had it today. Be just the 2 of us, right?
Mhm.
We had to bring on those 2 other guys. We had to hire on a developer, and some other people to help us out, assistants, secretaries, and all that stuff to make sure that we were very clear with our time and intentional. So those weren't bad decisions, but when you went to sell, it was that all came up again as
Impact
here's
of
how
the
it's actually
inevitable
gonna be.
exit.
Yeah.
When you
Um,
talk about investment in the process, how much did you invest in getting exit ready? Because you did 2019, you mentioned investment then,
yeah.
and then 2024, you just mentioned it again. How much
Yeah.
would you say you invested in the process?
Uh, 50,000.
Yeah,
We
that's fair.
hired
Yeah.
an M&A a legal firm, when conversations got real, and they were expensive. They were out of Palo Alto, and this is what they focused on: SaaS acquisitions.
Mhm.
Um, and so the two of the organizations were in the United States. The Massimo's organization that ended up buying us, called Groen's, publicly listed company out of Italy. And so two big things came out of that was selling to a publicly listed company, and then also selling to a company that is based in Italy. That's not like U.S. law, and those were massive hurdles.
Yeah, two
So
very unconventional constraints on an exit. Yeah.
yeah, yeah. So we had to deal with that, and what we thought was our term of closing the deal was supposed to be a couple months, ended up being a year for us to go through all of the legalities, things that were going on. They had to say publicly how they had to tell their shareholders that they were going to purchase the business without actually purchasing us, so that their shareholders could give the buy-in and the okay, and then we come back and renegotiate, and then things would happen in the market, and we have grown or shrank based on forecasts. So we have to renegotiate again based on the traffic and all that kind of stuff.
How
So
long was total timeline of deal?
it was a whole year,
It was a
entire year,
year-long process, yes.
year long process.
And
Yeah,
if you could go
from
back hindsight, so folks that are maybe getting ready for the process or they're in the process, hindsight, what are something that you wish you knew that you didn't? If you could go back and do it again, you would do differently.
oh man. I mean, I would love to say time box it. Like, hey, if we don't have a deal in 3 months, we're gonna go with somebody else.
Right.
But we had essentially committed to this company because we liked the culture. They were reputable. We saw the product market fit on how they were going to acquire us, where we sat within the portfolio of the business, the growth opportunities of the business within that portfolio. Um, and so there was a lot of things that made sense to us, so that we were willing to kind of go a little bit longer. But it came to the point where it was like, hey, we got to do this or we got to leave. And that was like that year mark. It was like, it's been a year, guys. We gotta do this.
Yeah.
Um,
Yeah.
so
Creating that
yeah,
process and controlling that process is definitively
yeah.
key. You had a
So
firm
have
doing
them
it.
sign something to, we commit to letter of intent of within 3 months to kick the tires and make sure everything's good. That would have been really, and that's, we tried that with our M&A lawyers, and uh, it didn't work in that process.
It's
But
hard. I mean, if you don't create the dynamic, I know that speaking of time boxing, it's 12:02. I know that we said that we had a hard stop at 12. I'm genuinely enjoying this for a lot of reasons. There's probably a lot more heart that I could get to, but I could also wrap it up. I just wanted to,
yeah, let's go for a wrap up. Hold on one sec. Let me just, I told the person I might be a few minutes late, so I just move it to, let me just talk to them real quick.
because I could go into a full transition of, Glenn Gary's, if they're listening to this point, where should they find you today? And we wrap it up, or we could go into a transition of, post exit going through this process. What was that
Yep.
moment of time realization like for those that are maybe thinking about it and haven't gone to the other side? What is it like on the other side? Because I feel like that's also like a sweet spot story. And then from there we could go into, so like whatever in
Yeah.
terms of time, like just
No,
tell me
they
and
just
then
they just gave me a thumbs up, so we're good for another 20 minutes if we
okay.
want to.
I will go into we'll wrap it up with the hair on the deal. So we touched on hair on the deal, time being a thing. We can either go into a little bit more hair on the deal if you feel like there's more insights that we want to pull out of that experience, or I could go right into the moment in time post exit. Let's get back into that mindset. How did it feel? Which do you think?
Oh, let's go post exit. I mean, of the part of the deal, it's just again the frustrations of dealing with the day to day changes in the market, plus what international law dictated.
Yeah, I
So
mean, it's such a unique, like, I love your story is amazing because it's quite literally like the investor's journey all the way through and through, from like start to finish. It's so unique. It's very, very, very unique and special, which is amazing to just give confidence to folks going through that they can do it, because not a lot of
mhm.
folks think that they can do what you did, have it on the side, and then get to an exit successfully. Amazing in terms of case study, proof of concept. But okay, so you went through this journey and you got the deal done, right? It's been a year-long arduous process. That insight, lesson learned. Let's put some time stops on it. Let's put a time box down. But you did it and it happened. How did you feel? Can you take us through the day that it closed and that everything became real to you? And can
Yeah,
you,
we timed it. I mean, this is like actually the let's do this or let's not do it, because we were going to do our next unspam event. And so we're like, we are going to announce this at Unspam, or we're not going to announce it at all. And so we had a couple months of lead time to tell them, hey, this is going to happen. So we actually we're on stage. I come off. My co-founder's like, look at your bank account. It's mine just was filled with money. And so we're like, cool, it's happened. So we get back on stage. Massimo is there with us because he's there and he knows the deal's going to happen. And we invite him up and we announce it on stage. And of course, I'm crying like a baby because like this is a year-long thing. We've worked on this thing for 10 years. And the company, that bought us, Groen, is well known in the industry. So it's not a hated company at all. It's actually a beloved company that's done a lot of good things. And so having them there already was a good thing, but having Massimo there to talk about why the acquisition made sense to the company and so in front of all the attendees. And these are all like our super fans, right? These are people that come every year or read every single email we send or all that kind of stuff. So it
They've been a
almost
part of
already,
the journey, literally.
yeah, it was like a family. It was like a family reunion that was like, hey, we're having a baby, and like everyone's surprised. It's like, hey, congrats. But like instead, you have 300 people in the room who are like know you pretty intimately because they followed your journey, and we were pretty public building this company. We built in public. We post our revenue and all that kind of stuff along the way, so people knew what we were doing. So people knew us pretty well, and so that moment was actually really special. And knowing that like I was going to become part of the ongoing company to lead there was that continuity that we would look for. And so it was like, hey, this isn't the end. This is actually the beginning of something bigger and nicer and better for the company.
Yeah,
Because
it
we,
was like almost like a warm hug embrace of one stage like ending to the next stage beginning literally on stage at the event, which is just like so amazing in terms of orchestration. Like talk about time box urgency.
yeah,
It's a great place to close. We're gonna do this and we're gonna do it real and we're gonna do it very public as we built in public. And we're gonna close this thing on stage and we're gonna hand off the baton, which is then continuity through. So it felt, yeah, that overwhelming rush of like, oh my God, realization. That's like something that really feels just like full. Did that go away? So at what moment did it go like, okay, now we did it? What like take us through that next step of the journey?
yeah. I mean, doing it in person was nice because this community had contributed so much to the build of how successful we were. Right, they were telling their coworkers, and so we wanted to make sure that they felt safe. That they were like, hey, these guys are going to come in, they're going to rip it apart, they're going to load it up with debt, whatever, acquisitions happen and suck the life out of this community. The
Those
community was like,
PE guys, yeah.
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 And so the community for us was like, this is the most important part. This is what we built. We built reputation with this community. We got to make sure that it's like thriving. So that's why we decided to do it at that moment. But I was still full-time job at another company. And so I had to go tell that CEO, hey, I just sold my company and I'm leaving. So I wasn't like, hey, the next day I start for the company. It was like, hey,
You just sold your company. What do you mean? You work
yeah,
here.
yeah. He knew about when he hired me, like, hey,
I know.
with this move on the side. And I'd spent time doing conferences or
Yeah,
whatever.
you
And
had a very public stage.
very,
Absolutely.
very public, very, very public. And it helped too, because I'd go and talk about that company sometimes too. But so I had a 6-week space between ramping off or off ramping from the other company, and then coming on board with Groen's and Be Free, which is the kind of the sister company that we work with. And so there was, it wasn't like the next day I was in the mode of like, let's just build stuff. It was like, okay, how do I transition off this and then transition in? And so I came on as head of growth for the company, and there wasn't a growth team. So it was kind of like, what does that role mean for the company? How do we do growth experiments? How do we apply some of the things we did in the community to the business? Um, they'd actually proactively hired a head of community before the deal was done to show that they
Commitment.
were committed to this whole thing. So coming on and working with her, and yeah, it was little by little after that. But then it was like, okay, here are your team members, here's your developers. Let's try to figure out how to mesh this inspiration to creation modality. So you go to the site, you're inspired, and then you actually want to build the emails. How do you do that? You do that and Be Free. And so where do the bridges exist between the two companies? And so that's what I do
Quite
today.
literally the weeds of integration, which is where
Yeah.
a lot of deals fall apart. And that integration is where a lot of deals get done and ultimately sometimes done bad, depending upon how it ultimately happens. But we're talking about a 10-year journey where you've been bootstrapping this business. You now brought it to this moment in time on stage, and the deal got done. It was a very emotional moment because you're with your audience that built with you in public alongside you. And then you also had a very clear goal of like where you're going next. They've already done some small investments of commitment to that continuity, which was extremely important in terms of making the right decision, going through that exit process, that year-long exit process. And now you're here today, which is interesting and unique for a couple of reasons. A, it's an awesome story. B, because it's your story. C, because it's a story that has insights in the function of some folks build and it's their baby, and they get to the exit and all of a sudden their baby is torn away. And the moment of close is very overwhelming because it's this anxiety driven process. And then you make it to the finish line and it's like, it's real. I did it. And it's a sense of achievement when it closes. So the endorphins rush in. And then that next day is like, well, what's next? And a lot of folks, a lot of owners that get to that exit, they kind of feel that void. And then it becomes almost like, what is next? In your situation, because of the way you approached it, because of the way that you built for 10 years, because of the fact that you mastered this concept of almost building this thing profitably on the side, which, yes, to many folks are the prize. Like that is the baby. And you guys were able to figure out how to do this so profitably, so successfully for so long, so well. It's amazing. And then that became the transition. So quite literally, it was we closed and I told my my existing boss, like, I just sold my business. And then you transition into your next journey, into your story that you are right now, running growth. It's been phenomenal to be able to be a part of this story and this journey today. The investment of time with the audience, hopefully listening, that took a lot of insights out of it. Extremely appreciative of. For those listening, it's definitely the Glengarrys. They are captivated and hopefully learning and will apply. If they wanted to potentially get in touch with you, or if maybe you could do an exchange of value, this for that, my story for perhaps this in exchange, what would you like the folks listening to do right now?
Yeah. Just if you're an email, go to reallygoodemails.com. Super simple, easy, remember domain. If you want to connect with me, you can just search up Mike Nelson on LinkedIn because I'm the only one. No, just kidding. There's like 10 million Mike Nelson. Just type in Mike Nelson, really good email. You'll find me. Say, hey, you found me from the podcast, and happy to connect some way. I've got a block of time every single day to connect with individuals, talk through what they're working on, how I can make it better. Again, that's part of like the community in us, is just helping people develop. It's like a free session. So happy to make that with this audience as well.
Super big call to action. We're going to link to everything in the show notes as well, because hopefully folks do take advantage of that in a very big way with a ton of meaning behind it. Thank you for joining us today. Till next
Thanks,
time,
Chris.
trust the process, commit to the journey.